My name is Adya. I am one of the panelists for this round. My preferred gender pronouns are she or her. And all the best, everyone.
Hi guys, my name is Mashara. I will be one of your panelists and good luck in the round.
Hi everyone, I am Maureen Tre, one of your panelists. No gender pronoun preference. Thank you.
Umar, would you like to introduce yourself? Okay, so I think Estelle wants to do so, or she did.
Exactly one week, I'll be releasing the glitter bomb.
A side note before we move on, please, before you start speaking, give me a countdown so that I can, or any one of my panelists can
3.0
just
video.
on.
It's got a bunch of new features, and it turns out even in
to be taken. And yeah, with that being said, I invite the Prime Minister to open the case for side opening government. Here.
Hi everyone, am I audible?
Yes, you are.
Okay. I think people are still typing. Okay. All right. My name is Abena Achiaa. I will be the Prime Minister for the debate. I do not have gender preference, and I'd accept POIs in the text space. Kindly do not unmute yourself to interrupt my. I'm ready to start when the panel is ready.
Just give me a countdown and I'll start.
Okay. I'm starting in 3, 2, 1. Panel, in the context of a post-pandemic world, the world is likely to go back to 2008, where we had the global financial crisis, which was caused due to unregulated stock buying, unregulated bonds exchange, foreign exchange, commodity markets, derivatives, etc. These things led to a huge problem of the world facing a huge recession. Speaker, we think if the world had implemented the policy or the model that you get from opening government, we probably wouldn't have had that. Ready to start when the panel What is ready. is the 5-part model opening government presents to you in this debate? We think that on our side of the house, by regressing this, we institute a new model or a new regime. Firstly, by states and international regulatory bodies.
Just give me a countdown and I'll start.
Access the financial market trading services. Secondly, we are going to introduce a tax system that will incentivize and also disincentivize individuals from indiscriminately entering the financial market. We are looking at government intervention policies that also still to some level of degree through things like subsidies, palliatives, etc., would still encourage individuals. But more importantly, we are looking at bank capitalization and lastly on risk assessment, which allows individuals prior to purchasing such financial markets would know exactly the harms and benefits of this particular model. We think that this particular model in and of itself was implemented, and we necessarily wouldn't have seen the 2008 financial crisis. What do you necessarily get from us as the House? Notice, panel, that this is a regret motion. So opposition cannot enter the finals by just arguing the benefits of financial markets, because we can principally agree to all those benefits that they will talk about. But the difference here is on our side of the house, we oppose the mode of entry that looks like unregulated and indiscriminate, low fee, easy to access entry into these particular things. We think that is the contention in this debate. It's not about benefits and disadvantages and advantages, right? Notice, panel, again, that because this is a regret motion, we ought to do a comparative analysis by showing the harms and benefits, but more importantly, how best we ensure accountability mechanisms on our side of the house, because we don't necessarily think that on upside they even exist. That because this is a regret motion, especially in light of do a comparative analysis by showing the firstly on states, but secondly individual level, but lastly on corporation level, right? But then like let's do rightly into the positive matter you get from opening government. Firstly, on why risk, like on a distinction between risky investment and safer sustainable investment, and why which side of the house is much more profitable. Notice panel that individuals when entering like stock markets because of their irrational incentives, or sorry, more or less because of their pervasive incentives to make a maximum profit within a very short number of time, tend to be irrational. This particular thinking or psychology is one that leads individuals to make very bad actions. What are the impacts here? Because firstly, these stock exchange in and of themselves are volatile because they don't necessarily rely on the economic principles of demand and supply, right? But secondly, means that there's a high propensity of exploitation by these particular, like by corporations that directly deal with stock exchange, but more importantly, middlemen like brokers, etc., who tend to like lure people into making such bad choices, right? On our side of the house, we're able to regulate and mitigate this particular harm because of our regulatory bodies and regulatory system that exists. What is the impact or the impact of this analysis? Because first, it means that in instances where individuals have a failed system or do not have like maximum returns on what these individuals from opposition will like present in the debate, right? What happens is that they lose financial trust in the system. But secondly, there's little to no incentive to keep on investing into such a system. At that point in time, because most states actually depend on these economic systems to thrive, we think that that is a lose-lose on the other side of the house. But secondly, notice how now, because of the volatility of such stock exchange, it has been a very bad corporate strategy to win more people and to like and amass a lot of immoral wealth, right? Because this particularly looks like incentivizing individuals to make bad choices in terms of bringing like 1 cedi for 1,000 cedis, etc. That investor confidence is one that is lost. We think that that's harmful. But how do we still ensure like and guarantee that we still have these financial benefits on our side? Because notice panel that especially in developing countries, the reason why like there's little to no incentives for them to invest in such such places is because of the zero-sum game that World presents to them. What does this particularly look like? Because the lack of a robust and secure financial system, which is premised on providing securities for financial investors, means that much more serious and long-termist and yet sustainable investors have little to no traction towards these particular states to have like these incentives, right? But on the counterfactual too, because these African states are buying into these bonds, like bonds exchange, etc., which provides like a huge promising like returns, but in the long run do not necessarily like Kojo and provide all these financial yields. We don't think like that's the reason why we still don't have financial investors coming to our side. On our side of the house as government, we have a stable institution, the stable financial institution that allows for the lay person to trust the economy and build a robust economy and stay within like bank system and keep like providing these and keep like providing money, but still there's returns, right? But then why is this particularly important? Because we think that risk assessment that we provide on our side of the house is one that directly ensures direct accountability for individuals who put money within this system, right? This particularly looks like knowing the extent of which like your stocks are appreciating or depreciating, but more importantly, they are able to make better decisions as to whether or not they want to opt in or opt out, right? We think that particularly is valuable. What OP needs to do in this debate is looking at the fact that in a post-pandemic world, we are likely to turn into a world of recession where individuals' money goes into the hands of the very few elite individuals. What is the best way to go? Should we provide a secure system that still guarantees all the benefits that they have on the other side of the house? Or should we allow individuals to make indiscriminate choices? We think on our side of the house, we are able to allow for the role of government to ensure like larger corporations and smaller corporations access, because this particular access means that we are able to directly respond and provide incentives for them to like have yields on their returns, right? But then lastly, we are looking at prices because we think that this particularly allows the states to directly control crisis and international regulatory bodies to ensure that good interventionist policies are ones that are implemented. We went from OG.
I thank the Prime Minister for that speech. Now I invite the Leader of Opposition to open the case for opening opposition here.
Yes, ma'am.
Hello, can you hear me?
Yeah.
I hope you can hear me, and I hope I'm not breaking.
Masiku. Open on the
Hello?
Hello, you're
I
audible.
don't think. Oh, okay. I'm in the wrong text space. Oh, okay. Okay, that's fine. Okay, thank you. So, my preferred pronouns are him and he. To take POIs, just type POI in the text space, and then when I'm ready, I'll take you. I mean, when I'm ready, then I would then call on you, and then you unmute yourself, and then. Hello? Who says I'm mute? Oh, okay. Okay, that's fine. Just a second. Okay. So I'll be starting in 3, 2, 1. So panel, we think that OG comes with a very skewed a very skewed world that they present as a problem in today's debate. We agree that in a post-COVID situation, we agree that people do not most people have been laid off of their works and all of that. The basic investments that they do are not enough to hold them, to sustain them enough in their living and all of that. We think that to the extent that the only alternative is to fall on financial markets with the little that people have to be able to get financial fulfillment. We think that it is very legitimate for people to be able to utilize these systems to be able to make a living for themselves. But why do I say their characterization was a bit skewed? We think that financial markets for a very long time have not been accessible to the typical and then the poor person. We think that with prices that were very high, it wasn't low fee because you needed to have some amount of some maximum amount of money to be able to join. We think that to the extent that they are now low fee and then easy to access financial markets for people to be able to get that financial fulfillment that they require, we think it is very legitimate for people to be able to buy into these systems, and that is why we see the rise in these financial market trading services. We think it is very good and will bring the maximum utility. Now, this is a regret motion. Now, aside just telling us some of the advantages, we expect that you should be able to give us the better utility for the stakeholders that are involved. First of all, the individuals who are investing. Second of all, the financial institutions involved, and in a long run, the states at the end of the day. So panel, why do we think our system brings the better utility for everyone? We think that, like I said, it is very important for people to be able to get financial fulfillment that they require. Now, the problem is that one of the problems they outline is that people are kind of swindled into some of these things. We think that is very false. We think that before people buy into these financial trading institutions, there is an informed consent. That means that they get to see the thing, they get to see the benefits and then the risks that are involved in buying into these financial institutions even before they buy into them. What it means is that they wholly accept if there are going to be risks, if they are going to make any losses or if they are going to make gains. What that means is that in their in their current situation, because they are not able to like have that those alternatives to be able to like have financial systems to get self-actualization and financial betterment, they still buy into these systems. And we think that it is very legitimate when they even make gains to be able to like sustain themselves in the long run. We think it is very legitimate for these individuals to buy into these systems. Now, why again do we think it's important? The second thing is convenience, because at the end of the day, they are easy to access financial markets. It brings it down to the lay person in like prone situations who do not have any alternatives of financial fulfillment to be able to like buy into these systems and be able to be better in and of themselves. We think it is very legitimate. But then again, we think individuals are rational actors, and then that the things that they buy into, like the situations that they find themselves, they should be able to like think it through, to be able to like weigh options and then make those decisions for themselves. So to the individual level, we think when they make gains, it is very legitimate, but then they will accept any losses that are coming in and of themselves. And then we think this is very important. But then also to the financial institutions and why it brings better utility. Now, because these are like low fee financial markets, like I said, initially the problem was that there was like some cutoff to how much you could have invested in these financial markets and all of that. Now, with bringing it down, what it means is that we are going to get as many people buying into these systems, and then we get like more monies into like these financial markets for them to be able to like have more investments very important, like have more investments like with the maximum capital that they have to be able to like make gains, and then these people would be able to like get that financial benefits that they require. We think that when we like have it low fee, we are going to get like more buy-ins into these systems where people who like easily access these systems will even buy into them more because of their situation. And we think that these financial institutions will be better in and of themselves to make like better investments, to be able to like get the maximum profits that they require, and then to be able to like give these people that financial fulfillment that they want. We think that to the extent that these financial institutions will be better and the individuals will be better in the long run, and like all that I've proven to you, we think that it brings better utility to like all parties. And we think that we should not regret the rise of these financial market trading services. Panel. In today's debate, notice that we have a rise in these systems. Like we have a rise in these systems. It means that the majority of people are buying into it. It means that inherently, like there are benefits, or there are some like incentives, better incentives that these people are getting intrinsically. What it means is that when we regret this rise, we are going to put these people in like no alternatives. We are going to deny them of their financial fulfillment, and in the long run, we are going to deny them of like the better situations that they want to find themselves, especially in a pandemic that puts people in like bad financial states and then prevents them from getting that financial fulfillment that we think that they require. We think that it is very important for us not to regret these systems and to be able to get enough buy-in for the larger, in the long run, the utility to the state. I think I didn't get any POI. The utility to the state. So when we get stronger financial institutions and we get more people with like better situations and better fulfillment in like financial matters, we think that in the long run, the state is going to be better off, as these financial institutions will bring like more revenue to the state and all of that. We think that to the extent that the utility brought to like all these stakeholders is very like largely like higher than the situation you get from opening government. We think that we win today's debate. I've never been this proud to propose.
I thank the Leader of Opposition for that fine speech. Now I invite the Deputy Prime Minister to substantiate the case for opening government. Here.
Hello. Good day, guys. Am I audible?
Yes, loud and clear.
Okay, so my name is Kojo, Opoku, Acheampong, and I'm the DPM in today's debate. My preferred gender pronouns are all male-related pronouns, and I would like to ask for 30 seconds to organize my sheets and then start. Right. Okay, so I think I'm ready to begin. So I will start the countdown, and I'll start in 5, 4, 3, 2, 1. Panel. In today's debate, you need to recognize the stakeholders, the two most important stakeholders, right? So one, these financial systems and how we can better sustain them, because these things are tied to how the economy runs, right? But secondly, the minorities, or in this instance, the poor that exist within this. And to the extent that the context that we give to you from the Prime Minister's speech is a post-pandemic world where a lot of businesses have crashed, a lot of businesses have slowed, and these poor guys are already in shackles, right? I think that it's very important that we actually prevent them from accessing these things. If that is the hard line, we gladly do it. I'm going to show you the utility. What do you get from like Elo? Elo says that, oh, Abena skews the debate. She doesn't show us why. She doesn't even propose a model that is open so that CG can engage, given that it's still the motion, right? But secondly, after saying that, what he does is that he also engages the same frame. But then the mistake you have from him is that he assumes this financial market as a world where, oh, poor people would say, I'm going to invest. So we invest, and then right there and then you give them the money that they want. Secondly, he assumes that, oh, when you invest, you are most likely going to get everything, right? So, Panel, we think that one, as a government, right, we should be able to protect these two things, the minorities and the financial system, because of how it's important in today's debate. Their whole case, in summary, is about, it can be summarized into 3 steps. One, minorities are going to invest. The context is that because everybody wants to make quick money, Abena tells you that. But secondly, when they invest, all their problems are going to be solved, and then they are going to get rich. Everybody is fine. They forget to show you how that even happens. We think that CEO can do a better job, right? So, Panel, what are the comparative in today's debate, right? In today's debate, Abena tells you of how a low fee easy to access financial market is, one, unregulated. 2, it is likely going to exploit the minority. And 3, most importantly, it stretches these financial systems such that it can less likely lead to things like financial crisis and all of those things. So already giving you examples, right? So, Panel, in today's debate, from our side of the house, we regret, 1, an unregulated financial system. We regret, 2, a system that exploits the minority who are already poor given our context. 3, we regret stretching of the system so that the government cannot necessarily regulate it, given the context that we find ourselves in, right? So I'm going to be engaging these things specifically, right? But Panel, first off, right, the characterization of the financial market system is that these things are largely not stable, right? So what that means is that when you invest, 1, you are less likely to fail and you're less likely to go and lose your investment. It's not always certain. Panel, as the state, which factions, is it the rich or the poor, would you allow to invest in such an unstable system, given the kind of context we exist within? But now we think that minorities are incentivized because these minorities necessarily need quick money. There's an assumption which all buys into that these things are largely straight. We think that it's very important to know that these things are not stable. Okay. I've stopped. Oh,
Sorry. I was saying, please stop spamming the chat.
okay, sorry. I thought you stopped hearing me at the moment. Sure.
No, I can hear you.
Okay, can I continue?
Yeah, sure.
Okay, how many minutes did I have to go so that I know what to prioritize? So I had 4 minutes more. Sure, let's do this. So in 3, 2, 1. Panel, we think that it is immoral to have an unregulated system that exploits the poor and make them go and put in all their money, which they already have few left and all those things. That is why Abena gives you a model of how best you're able to liberate these guys in our own world, right? But secondly, this is how the minorities are exploited. Recognize that when we open these things, we concede with OO that a lot of them are going to troop into because of like the misinformation that you are always going to make it in that system, right? What this means is that then you give the right for capitalists to exploit them, right? What that means is that one, these equities that they're already going to are going to be decreased, because in a world where there is power asymmetry exists and an information imbalance also exists, what it means that these financial institutions are more likely to reduce the price of these equities and all of those things, because one, the poor lack bargaining power and all of those things. In all's best world, be able to access financial institutions and brokers that are going to actually give in these deals for them. But in a world where these things are unregulated, the problem that happens in such a world is that a lot of people go into the system, they are less likely to even exploit the kind of people that they are going to build the deals from, right? Because of one, the information asymmetry that already exists between that space, right? But secondly, we don't think that these minorities are even going to make a rational choice of going into it, because, right, all that they know is what just tells them that, oh, you are definitely going to make it. I think that is also important that you know, right? But panel, how do you then stretch these financial systems, right? Notice how at any point in time, like, the financial system must be balanced, and that the amount of money that comes out of it is equal to the amount of money that stays within, so that there can be easy flow, there can be proper monetary flow, and that's how we best sustain economies. In a world where everybody is investing, what this means is that at certain point in time, the amount of money that is out or that is expected in is not balanced. What this means that you stress the financial system, and when these things happen, they are less likely, the governments are going to lose control because of the kind of context that we find ourselves within, right? But panel, most importantly, we think that today's debate being a regret motion, what ONCU are supposed to do is not just to say, oh, that status quo is better, we don't think that you should change status quo. What they should engage is how, one, an unregulated system is better. Two, how a system that makes the minority become exploitative is better. Three, how when we stretch these financial systems, particularly in a post-pandemic world, is better. They don't do that. All they say is that, oh, it's good. And we think that it's equally good. But then what we are against that is that, one, it is unregulated. Two, it's very exploitative. And three, it stretches the system. And that is why we regret these things, right? But panel, look at the utilities that exist in our world, right? We think that our world takes a moral stance when we regulate these things, because one, we think that we have the agency, we have the agency to have to protect these minorities, right? But secondly, we think that in a world where the system has very few people in it, we're able to control them. Panel, note also how at any point in time, people must be incentivized to always engage the capacity within the economic stream, right? So if you're a rich person, you must be incentivized to engage within the capacity that you want. That's why government gives incentive for these guys to also to involve in charity and all those things. When you're a poor person, you must also have an incentive to engage. In ONCU and OO's world, what they do is that they destroy this whole economic system and make sure that people don't engage where their financial capacity is. The problem that exists within that is that you have an imbalanced economy. We think that we are more likely to go and we are more likely to do this thing. But panel, my last extension will be on cryptocurrency and how it plays out in today's debate, right? So panel, cryptocurrency is a typical example of what we are talking about in today's debate, right? We realize that how a lot of people would want to go, but the thing that these things in all of this stuff are largely volatile, and in a world where you do not have enough capital to even feed yourself and all of those things, we think that it's very immoral for you to do this. Panel, in our world, right, we think that we made a trade-off where we shut the minority from these systems because we better protect them. I've shown them that. But panel, even in a world where they all chip in, and then we think that these systems destroyed and the systems are stretched, and then we lose the kind of grip over a financial system. The problem is that everybody now loses, the rich loses, the poor loses. That is a utility that exists in our world. You don't get that, right? But two, we think that in our forces companies, especially banks, to implement better investment systems to maximize the investment returns and not engage in harmful practices. But secondly, we think that government has the capacity to educate people and also provide them incentives to make sure and palliative, particularly afterwards, so that we cater for these minorities better, right? But panel, today's debate is simply about two things. From our side of house, we have gotten that we better ensure the economy of these countries, right? We better ensure the economies of these countries. Proud to propose.
I thank the Deputy Prime Minister for that speech. I encourage you all to ask and take POIs. It will help your own case. Rest the choice is yours. I invite the Deputy Leader of Opposition to substantiate the case for opening opposition and also to close the opening half of this debate.
Hello, panel. Am I audible?
Yes.
Am I audible? All right. So please give me some few seconds. Just some. right, I'm ready. So, preferred pronouns, he, him. If you have a POI, indicate in the text space, and then I'll take you. If I don't take you, please don't budge. So panel, I'll start in 3, 2, 1. So panel, today's debate, the motion reads, this house regrets the rise of low fee, number 1, and number 2, easy to access financial market trading services. So notice how OG squirrels the motion and does not engage what the motion seeks of us. Because once OG goes ahead to give us a model where they tell us that they are going to have government regulation, it is not something that we can contradict from our side. It is not something that we don't want on our side. We think that regulation can still exist on our side and still not regret the rise of these things. So these things can still be on the rise and the regulation will still exist. So OG's case is neither here nor there, especially about the issue of regulation. We on opposition bench are not against the issue of regulation. In any case, who will support a business happening in a certain country without the country having a say over how the business is done? What we are arguing about is whether the rise in the low fee and easy to access is something that we should regret. So we think that in the past, when it comes to trading on the stock market and what have you, it has been left to only the rich, right? Only the rich people are able to access. But now we have them very cheap. So you have MTN Ghana selling shares as low as 7 cedis. So everyone can buy. So what this debate is about is that government is telling us that no, MTN Ghana was wrong for them to sell their shares as low as 7 cedis for everyone to be able to buy. They should sell it at, say, 1 billion Ghana cedis so that only the rich can be able to afford. That is what today's debate is about. It is not about regulation. All right. So what it then means is that because it's a regret motion, it is largely about utility. And that is where they get it wrong. So they refuse to engage all the utility arguments that came from the leader of opposition. And that is why we must place over OG in today's debate. But then what do we get from them that mimic utility in today's debate? So they tell us that in this system, there is a lot of risk. And we don't want poor people exposed to risk because they lose their monies and then they would be exploited. Look, panel, every business entity has a certain amount of risk attached to it. Even if you are a medical doctor, you stand the risk of getting infections from your patients, right? But you still serve patients. So we think that this is an avenue where people make money. We agree that people make monies from this avenue, but we don't think that it is quick money, which I'll come to very, very soon. We think that people make money from this system, and it is a system that we should encourage our people to go into. We think that the issue of risk is one that exists everywhere. So people should be able to make that rational decision and be able to choose whether they would enter into it or not, right? So another argument we get from them is the fact that this is a quick money avenue and what have you. It's because they don't know how these systems work. So they give us the example of cryptocurrency and they think that is all what it is. No, we think that the large chunk of these kind of things are the issue of shares and trading on stock market and what have you. And these things are based on real companies on the ground. So the example of MTN Ghana I gave, MTN Ghana doesn't guarantee you quick money. No, but they guarantee you that the profits that they will make at the end of the day, once you are a shareholder, you are going to get part of it. There is no question of quick money here. This is not my bet or betway or something. No. This is not what we're talking about. Then they say these people are going to be exposed to they are going to be exploited by capitalists and what have you. We think that, look, this is particularly not true because most of the actors on the stock market are businesses that have been verified by nations and are very good, and trusted actors, right? So we don't think that this is particularly going to happen. But the last thing they say is that the financial system is going to be stretched, and when this happens, it is going to affect the economies of nations. Now, why is this problematic? It is problematic because of the analysis they give us. They tell us that once it is free, it is low, and everyone is investing in it, what it means is that we are not going to get the returns for everyone, and so the system is going to be stretched and what have you. We think that this is false because we think that one of the basic principles of economics is the fact that capital begets capital. So when you put more money, we are going to get more profit. And when we get more profit, we are going to share it with our shareholders. People are going to, like this company are going to share to their shareholders and what have you. We think that all their cases fall flat in today's debate. Panel, we think that as part of the utilities that we've given you, I'm going to like give you like a better understanding of what you've got to today's debate. In today's debate, the stakeholder we have to protect is like the poor in society. Why is this important? Because in the past, these systems have been left to only the rich. So the rich are able to cater for themselves. But with this particular move, like both the rich and the poor are able to invest. So it means that it covers both the rich and the poor, right? So it is the poor we have to care about, because no matter the system, the rich would always be able to sail through. But panel, notice that in our societies, and as OG says, we are like entering into a post-pandemic period, we are going to have people like losing their jobs. But even without pandemic, people are already losing jobs. People don't even have jobs. And like governments are like disappointing these people in that regard, right? So we think that these people do not have like alternatives at giving themselves and their families a reasonable life. We think that like not regretting the rise of this low budget, low fee stuff and easy to access stuff gives them an opportunity to be able to invest. Panel, notice that the poor in most societies are in minority, right? Like are largely minority groups, right? And these people are like systematically disenfranchised. What it means is that these people are not given jobs. These people are not like able to access the system that would make them rich, political systems and what have you in society. So when we give them this system, it is a system that does not discriminate. So no matter who you are, you can still be able to invest in this system. What it means is that everyone can be able to invest and get something for his or her family. This is particularly important. And the poor in society are the people who want to protect. We think that, like in our world, we approximate an equal society because the biggest segregator of society is poverty. But where we have people who are able to provide for themselves through like taking advantage of this kind of systems, we are going to reduce the poverty in society, and we're going to be able to bridge that gap that exists between the rich and the poor in society. Finally, today's debate is just about utility, and we think that the people we should protect in today's debate are the poor, because the rich people can always take care of themselves. We proudly oppose.
I thank the Deputy Leader of Opposition for that fine speech. Now I invite the Member of Government to open the case for closing half of this debate. Here.
Thank you, panel. Please just give me a young moment to set my papers.
Just a second before you begin, I see one person whose name is Mohammed Sharif, who is unmuted. Can you please mute yourself? It might disturb. Thank you so much. Yeah, Member of Government, whenever you're ready.
Right. Sorry about that. I'm just quickly setting up my timer now. Starting, I start, Chair. Oh, am I audible?
Yes, yes, you're audible. Give me a countdown and I'll start the timer for the other speakers as well.
Thank you. Starting in 3, 2, 1. Panel, we need to conceive of this debate, understanding the risks that exist. We don't think that to just say that we prioritize access in response to the global recession is significant to characterize a benefit. We think access is not absolutely valuable. Access is valuable if it can guarantee significant beneficial outcome. And that's the basis with which we firstly clash with opening opposition in this debate. So essentially, what do we get from the opposition bench? Firstly, they tell us that it is rational to allow the poor to participate in this easy to access and easily or rather low priced market because individuals are rational actors and we ought to allow them to make this decision. The first problem with that analysis is that it's not qualified. They don't state why this rationality exists to a significant degree of certainty. And so we don't think that it is fair to arbitrarily assume that this is true, especially because this is genuinely the mistake that is made in economics. They assume that all actors are equalized by the capacity to make similarly rational decisions, but this isn't true because often circumstance, as well as what you lose as an individual, often decides the extent to which that decision is rational. Why do we think it isn't rational for the poor, therefore, to operate in these markets? Firstly, because we think that in a post-pandemic world and financial recession, we don't think that making risks that take a lot from you and that don't guarantee a significant return are investments that one should be making. But secondly, we think that often these are individuals who would take money that is that doesn't exist in plenty and would invest it and not necessarily, especially without the guarantee of something that would come and that is significant. And so we think in this instance, if you have more to lose as an individual by making an investment, that investment isn't necessarily rational if you are far better off or marginally rather better off by not making that investment. Secondly, what they tell us is that when we have more investments, they tell us that financial service providers are going to have more investment because of the low fee, which means that there's going to be genuinely just a great buy-in from consumers. The first response here is that the investments that they are providing, firstly, are already volatile. OO tells you why this is the case. Therefore, panel, we think that it is not inherently good that the service providers have the ability to get more money for more investments. Comparatively, why is it safer if entry is difficult and expensive? Two reasons. We say that it is better because firstly, it means that we have a market with because we have a market with great funds circulating, the state is incentivized to enforce regulation. For example, the Facebook Cambridge Analytica scandal exposed how much money Facebook regulates or owns, as well as the extent to which that industry isn't regulated. And therefore, when an industry has great funds circulating and doesn't have a great deal of regulation, we think that because of the amount of importance and funds that circulate in it, it often necessitates that the states enforce regulation. That was the point of the Cambridge Analytica Senate hearings, for the state to realize that a lot more regulation was necessitated in that instance. That's why we value a much more regulated world. Secondly, we say that the state is incentivized to implement protections or swift reactionary measures. For example, in the 2008 crisis, the US government bought stock of the businesses that were in crisis to help finance those businesses and help them survive. Again, because this market is of great value given the amount of money circulating, the state is incentivized to act as well as to aid in instances of crisis. We think that in this instance, it means that there are much better safety and reactionary measures that ensure that there is some continuity of business and that investment doesn't remain in limbo or lost at the end of it all. Lastly, what they then also tell us is that we need to protect the poor in this debate. Firstly, again, access is not just inherently valuable, it's valuable if it is tied to a significant impact as well as an impact that is guaranteed. Therefore, panel, note that the poor entering the market doesn't inherently guarantee that they will succeed. They needed to argue why just because it is an easy access and cheap market, that isn't only the benefit, but that the benefit means that there's a likelihood of success. Because they don't characterize this, because they can't, given how volatile these markets are, we don't think that it is inherently beneficial to allow poor people to invest into these markets. Cool. With that in mind, what then is our extension? Firstly, we're going to tell you that for businesses offering these services, we say that a perfect market is not profitable enough for it to remain a beneficial market to continue to operate in. But before I proceed, I'll take the POI from closing. Closing, please speak quickly.
We think it's okay at the end of the day for us to include people who have been secluded from markets, even if they are not going to get benefits. We think that inclusivity is something we ought to value in today's debate.
On what grounds? Inclusivity is not inherently good. It is valuable if a person is going to get a greater outcome. Because what you're saying is it's okay for them to gamble even if they end up worse off, just because on principle or just purely on symbolic reasons they were included. That's not a valuable contribution. Cool. Why are perfect markets bad for the financial servicing business? Firstly, because perfect markets have many entities offering similar services with little diversification possible. This means that it is inherently not very profitable to operate in that market because there are many of you doing the same thing. What this means is that the only way that they're likely to make some sort of profit is by trying to diversify their service. At best, what diversification looks like in these markets is reducing the price of your stock as well as your services, right? Why this is bad is, one, it means you again get far lesser profit as an entity, but secondly, it means that you sell cheaper stock, which has historically been bad and led to financial crises, i.e. the Great Depression. Third, I would say that it's bad for consumers too, because you make it exploitative for them, right? You make the market attractive because it is cheaper, even if you can't necessarily guarantee outcome. The second extension that we give you is that this encourages what's this decentralization of the financial market. For example, we see this with the rise of cryptocurrency, which is a currency that is largely decentralized. The problem with this is that decentralization of financial markets has often has led to a lot of corruption in, for example, a lot of developing states where they don't have a significant capacity of regulation. So we think that increasing the existence of such a market in the absence of strong and similarly increasing regulations is absolutely terrible. In comparison, we prefer a status quo, or rather a world where it's difficult to enter, right? Firstly, because it means that there's far greater incentive on states to invest, to regulate that industry. But secondly, a greater incentive for states to ensure the continued success of that industry, given how its failure has far more damaging ramifications on the greater economy we're very proud to propose.
I thank the member of government for that fine speech. Now I invite the member of opposition to open the case for closing half of opposition here.
Can you just confirm that I'm audible in the chat space, please? All right, so my pronouns are they or them, my preferred ones. And I'll begin my speech in 3. Someone is typing, let me just wait. 3, 2, 1. Panel, the reason why closing government is out of this debate is because of the POI that we give them. And the answer, thinking they've done a great job, yet shooting themselves right down in the foot. Because number one, we're going to argue from that, and it's going to be forming the basis of our extension. We think at the end of the day, when we realize that within the current world, minority groups, poor people, people like black-owned companies, black-owned businesses have been the ones that were excluded from financial markets simply because they can't be big players. We think when we try and come in with a new model of doing business, we ought to first look at the very first thing that you need to remove from the system, which is exclusion of groups that were previously marginalized from such systems. We think at the moment at which we do not value their inclusion, we make a very bad precedent. And we think this is why CG doesn't get the POI. But more importantly, they say, oh no, we think inclusivity alone is not enough. We think at the end of the day, the reason why open or like closing government or the wall of the government bench thinks that small businesses, individuals who want to enter into financial markets can't make it, is because they haven't been in the ground. We think at the end of the day, anything that exposes you to a business, anything that exposes you to systems that have the propensity or the potential to better your life in the next few years or in the future is better. We think being included is what women are fighting for. We think being included is what queer people are fighting for. Even if people don't see the benefits that you have by merely including you, we think at the end of the day, merely an inclusion of a group that was previously not included is a great achievement that we ought to value in today's debate. And we can only like attain that when we argue from closing opposition's case, right? But more importantly, why do we think that the whole government bench makes like a very bad analysis or a very bad assumption in their debate? They make this assumption to say small players don't bring within themselves enough investment. We think at the end of the day, this is not true. We think when you allow access to a variety of individuals to come into financial markets, what you do is you allow room for 1 billion people that hold $10,000 each to enter into a market. We think the subsequent amount or what that amounts to is something that we ought to value, and we don't necessarily see how such amounts can be downplayed. In any sense, we think when we allow for easy access to financial markets, what world do we create in? This we also tell you as part of our extension. We tell you what it looks like is a poor graduate from Kenya who has a smartphone and doesn't go to any job, doesn't have any access to any other form of entrepreneurship. What it means is he can simply download his IQ option and download his best or his preferred trading like application, go and log on to the next available free Wi-Fi that he can find and start trading whilst earning himself money for data, which is something that you would want. We think at the end of the day, the small like results, the small consequences that are coming out of that small trading is something that we value, especially given a world where individuals who do not have access to financial markets have been downplayed, they have been told they can't enter because they don't have enough, even if we all know that the little amounts that they have can greatly contribute to the livelihoods that they want. Because we don't think that when individuals trade, they want to become like the next Bill Gates. We trade in financial markets because we want the littlest amount of profit that we can get that can sustain us. We don't want all of us want to become Strive Masiwa, but we just want that inclusion. We need to have that access, and we think this is something we ought to value. But most importantly, why is it that this debate has been framed in a very dangerous manner? Because they tell us, oh look, what happened in 2008 was for what opposition is arguing against. We tell you that's a lie, because we tell you in 2008 what happens was like we all refer to it as the US like recession, right? What happened were banks were the main culprits. Banks took like great risks in their mortgages. These are the players that government still like debates or perpetuates to be the players or the actors that must be involved in today. The players who got us into a recession by being greedy and buying like really risky mortgages and taking them into account. We tell you that it was never individuals who pushed for the recession. But more importantly, why is it important that we ought to debate, even if we are going to take this thing to say, oh, this is about the recession, the post-recession that is coming through? We need to analyze two things in the markets that we have to do. Number one, what is happening pre-pandemic? What was happening pre-pandemic? The global poor had no access to financial markets. What was happening was only the big guys, the elites were trading. But even during the pandemic, what is happening? It is still the elites who are in play and like not allowing access to the very same things that the global poor want, things such as access to healthcare. Why? Because in many countries, like in African countries, the individuals that we speak of do not have access to even gain health facilities. So what does it do? Once you limit them the access to access financial markets, when we tell you that this creates a basis for making some form of profit, what you do is you even make them suffer more in that, like during their pandemic that you're so worried about, because what it means is they can't even have the enough resources to access the basic antibiotics that they would need in the event that they have COVID-19, because most African governments can't even afford to take care of them, right? But more importantly, why is it even important to analyze the post-pandemic what that they speak of? After the pandemic, what would you want? I'm not taking you. What would you want after the pandemic? We would want panel to look at the post-pandemic and what will be achieved after the pandemic is gone, right? So we think when you have individuals having access to financial markets, this is what you gain. You are going to have individuals who are financially independent. post the pandemic that they're so worried about. You are going to have individuals who are more involved within the economic sectors of the opponent. But more importantly, panel, why is it imperative that you know that closing opposition becomes first in today's debate? Because we tell you of how accessibility is important. We tell you of how you directly can control your market within these online trading stocks, right? We think what the post era looked like was you need to have a middleman, a broker who would charge you, a broker who would tell you that your money is not enough because they would need some form of commission, they'll take some percentage of it. But right now you don't need that. But more importantly, let's engage this thing that they tell us of cryptocurrency. Why is cryptocurrency even more important and something that we celebrate? Because it eliminates the middleman who used to steal from you via transactional charges. We think cryptocurrency ought to be something that we celebrate because it allows access to your financials without anyone taking away from you. But let's also engage this whole thing to say, oh no, we think there's exploitation of minorities. We think exploitation of minorities is more abundant in government's side because what it does, it limits the involvement of those minorities because we already show you how they don't have enough access to the capital, to the resources that are needed to engage in this financial markets, right? So we are better off the side that includes minorities. With this panel, we have never been more proud to proceed to a final in a PAUDC. Thank you.
I thank the member of opposition for that fine speech. Now I invite the government whip to summarize the case for government side. Here. Gavip, are you there?
Hi, sorry, am I audible?
Yes, you are.
Sorry, I think my power just went out. Can I just have like 2 seconds? I just need to get a timer. Okay. Sorry about that delay. If anyone has a POI, please put in the text space. Starting in 3, 2, 1. Panel, I think the comparative in this debate is who helps the poor more. Because the closing opposition is very disingenuous. They say that representation and inclusion just matters because it matters. Number one, it's very bad strategy to admit that you have no impacts on your side. But secondly, their own benefits are tied to the promise that these individuals will benefit financially from the system. Because they say we need to be able to afford antibiotics. So then you do have a burden to explicitly show mechanization. You can't just cop out of it by saying queer people just want to be included. No, queer people want access to a better life. Therefore, you have to provide mechanization of why that better life is achieved on your side. Because just being included in the IMF is not objectively good for developing states. Its structural reforms mean that we incur significant amounts of debt, and that means that we have bad economies, right? So I'm going to deal with this on a couple of bases. The first thing I'm going to understand is why access is better on our side, or rather why access in and of itself is not just good, but why we get more material benefits on our side. This is because just having access doesn't mean you have access to money, right? This is for a couple of reasons. In the developing world, there's significant barriers that mean even if you have got a loan, it doesn't necessarily mean you're going to materialize into a profit. Number one, we have smaller and undiversified markets. Lindo's extension tells you that these markets continue to be undiversified when we protect perfect markets because we don't have any barrier of entry into the market, and we therefore get more individuals who are just entering on the basis of capacity but not necessarily on benefit of that economy in general. But secondly, there's less spending capital that individuals have, right? Number three, there are less pull factors within these financial markets. Number four, there are weaker institutions that can protect these businesses. For example, businesses have less access to litigation if they're involved in fraud, or they have less access to law enforcement if the business gets stolen, for example. Thirdly, individuals don't necessarily prioritize investment within their business because there are other priorities. Individuals have got significant barriers, such as spending that money on their families rather than just investing it in a business. This is why microloans that were given to women in Africa didn't materialize to better businesses, because again, we have to buy things like antibiotics. It's not true to say that when you just give people access to small amounts of money, that this is going to materialize to net benefit. But lastly, because there's a lot of demands that are placed within individuals, right? A lot of the time, the literacy that is required to actually get benefit from these markets is incredibly complex, and this is not something that is that's accessible to the average person. The nuance here is that you understand that just having access to a loan doesn't mean that you get access to a lot of benefits. If anything, it means that you incur significant amounts of debt. The reason that this is impactful, panel, is because we admit that within the developing world, poor people already have access to limited funds. When they then spend this money on things that are unlikely to yield them returns, that's a harm. The reason this is an important contribution is because what OG says is people will incur debt. What OO says is that people might incur profit. CG is the only side that actually resolves this clash and shows you why people are more likely to incur debt, why that's a bad thing. But then let's deal with stocks quickly, because it's something that OO speaks about, right? Number one, I don't think that's the context, because poor people are very unlikely to invest in stocks, because your own mechanization is someone must have like $10,000 just lying around. That's not really the context of individuals in the developing world, most likely. But secondly, they don't often have enough disposable income to invest in stocks because the returns come much later. But secondly, even if it was, often these stocks are incredibly complex. This is why CEO's mechanization of we remove the middleman is a really bad thing, right? Because rich people will still have access to things like stock brokers. This means comparatively, they're likely to make more benefits on the returns of stocks, right? But secondly, it means poor people are now more like disenfranchised in your world, because having a stockbroker is actually pretty important, because the stock market is incredibly complex. That's probably why we've all been debating it pretty badly. But thirdly, we think that the return is not even a sizable return, because investing in a stock market is dependent on the quality of your investment. So if you only invest small amounts, even in a world where you get those returns are not big enough for you to actually reform the market or to even buy antibiotics. But thirdly, even if businesses were good actors, we think this creates a bad market for them, because largely then the people who are investing within their stocks are people who are not dependable, because they don't have constant streams of income. Their income is now dependent on the stock having a return, which may or may not happen. In the long term, that's a pretty bad thing. But secondly, we think there are comparative benefits. The benefits of people having money and using that to benefit the economy can exist in the absence of having these kinds of small barriers to entry to the market. You can invest in your local economies. You can invest in local businesses. You can get a job and have a salary and have a more stable income. We don't take away those benefits. I'll take a POI from opening if they have any.
Yes, so in today's debate, like, certainty is not assured anywhere, and these people do not have any alternative. We think that when they invest in these systems, they are at least assured of something every month, as opposed to not having any other alternative.
Okay, this then brings me into the way up of the extension that's bought by Lindo versus all the other teams. What Lindo tells you is really important, right? Is that sure, risk may exist to some extent. However, if there is a problem with the financial system, we are more capable of reforming it when it's centralized. An example of this is Modi's centralized plan in India, where there was a problem of corruption. It was more rectified when it was done through a central body, and that's why we protect institutionalized financial institutions over decentralized institutions. But secondly, what she tells you is really important, right? She tells you a couple of things. Number one, she tells you that it's important that we have a reactionary measure to the harms that exist within the current financial system. So a harm that exists within the financial system of having low barriers of entry or being more accessible through things like technology is that it's deeply unregulated. especially in the developing context. We don't have any way of even regulating things like cybercrime or even monitoring things like cybercrime. That becomes significantly worse when, in the interest of access, you move your financial system to something that you simply cannot regulate or are not ready to regulate or don't have the capacity to regulate. But thirdly, she tells you that perfect markets are really bad, right? So just having people arbitrarily enter the market is a very bad idea, because within perfect markets, governments and centralized systems need to control the types of businesses that are entering. They need to ensure that there's enough competition within these businesses. They need to ensure that they are not producing predatory things, predatory and exploitative practices in order to protect people. All of this goes away when, in the interest of access, you remove the middleman, which in reality is the only person capable of regulating this market, because we have shown you mechanization of why this is bad, because we've shown you real impacts with the side that wins.
I thank the government whip for that speech. Now I invite the opt whip to close the debate. Here. Opposition whip, are you there? Can the member of opposition please check upon opposition whip if they are here? They aren't audible to me either.
Hello, Chair. My apologies. My Discord app has been dragging, so I haven't been unable to unmute myself in time. But I hope now you can all hear clearly and then answer.
You are breaking a little. Can you please read the motion once?
Okay. I would try to put my voice on speaker, and then try to enter the text space as well. I'm so sorry. My Discord app is dragging, and it's kind of slow. So you need to be patient with me.
Can you hear me now?
Yeah, it's kind of better.
Alright, I'll need other teams to indicate as well if they can hear me, and then I'll proceed. Please, for the time being, I'm not able to access the text space, so you can just unmute yourself and then confirm by audio if you can hear me.
Yes, we can hear you.
All right, thanks so much. I've managed to open my text space, and I can actually see that you can all hear me audibly. So I'll begin in 3, 2, 1. Panel. The fundamental characteristics that underscores business ventures is that it is risky, and by this we mean that there are equal chances of success and failure on the basis of contextual variables and how one is able to manipulate them, especially in financial market where speculation predominantly exists. We're talking about factors, panels, such as global market trends, as well as the fluctuations of currency values, which we think will still exist on either side of the house. Panel, we think the fact that huge businesses have failed in other instances really shows that failure is nothing that is exclusive on our side of the house. Panel, we think that there are large business with huge capital investments that have actually closed due to failure. And so we think that failure is not something that ought to be of concern in this debate. Panel, over and above that, we think success and failure is also dependent on individual autonomous knowledge and ability, which we think is limited on side government. Two responses on that. Firstly, we tell you that the existence of regulation limits individual autonomy, that actually limits their capability to be entirely in charge of their investments. And you find that very much problematic when one cannot control their very investments and how their money is actually accruing. But secondly, we think it is problematic to assume lack of knowledge, lack of financial capital, which it translates to the lack of knowledge. Panel. We think the very fact that one doesn't have enough capital to at the stock exchange ought not to be something on the basis of which that would think that doesn't have the adequate knowledge for them to engage in financial market trading. I think that people cannot afford to trade at the stock exchange because they're not millionaires or billionaires, but those people actually have adequate financial intelligence which they could use to trade in this very low fee financial market trading platforms. The underlying principle behind government is one of trying to protect the poor by exclusively denying them access. In the tweet, we show you that business is by nature risky and the market quite unpredictable. We think government's world is equal to terminating pregnancy simply because you want to insulate the unborn child from the negativities of life. Two responses. But before I go on to my responses, I'll get OG. OG, please. I'll move on. We think the fact that someone is financially poor doesn't necessarily mean that that person doesn't have the adequate knowledge for them to engage in this financial trading. And the reason why we are merely saying we ought to broaden this spectrum and open up access and opportunity to the poor is simply because we ought to allow them to use the little capital they have for them to do something which they did not which they could not previously do. All right. And on the idea of exclusive denial of this opportunity to the poor, panel, we tell you that the very definition of the poor that we get from the entire government bench is something that is very much problematic in today's debate. Panel, we tell you the poor is not something who doesn't entirely hold money. We think this could be someone who is actually saved and reserved some money for investment, but they're just looking for opportunity. Instead, the very fact that every business at every level is risky is not something that ought to lead us to entirely exclude the poor from financial markets trading. Insulation is something that ought not to exist in this particular debate, and therefore ought to allow these middle class citizens this very opportunity. Second panel, we think availing opportunity to all broadens the spectrum of choice. Panel, we think every individual ought to have an equal choice of deciding whether they ought to put their money in risk ventures or not. So I think the moment we actually have these low fee financial markets existing, we are letting the poor decide for themselves and not to have their financial muscle deciding for them. And thirdly, panel, we think individuals have the right to realization and self-actualization even when we are not guaranteed of positive results. Panel, the entire CG case is based on the idea that we cannot open up access to the poor when and when we are not guaranteed of positive results. Panel, we think that is very much our false. We think we have actually allowed the same opportunity to the elite when and where they are not guaranteed of positive results. The people who have been trading on the stock exchange, the people who have been trading in derivative markets, the people who have been trading in bonds, in big monies like in billions and in millions, are actually not guaranteed of results. And we think this illusion of assuming that the poor ought to be given things on a platter, the poor ought to be given opportunities when and where they are guaranteed that they're going to yield profits, is actually something that is very much negative and something that is very much discouraging to the poor. Without this belief is what has actually made the poor fail to invest and simply rely on the money that comes from employment because they seek security too much. And we tell you, panel, that even if there are no guarantees that they are going to have success, we think they ought to be allowed the chance and the opportunity to actually so express their own desire to engage in these business ventures. Panel, we tell you that in as much as failure is not cast in stone, in as much as in every business, failure equally exists in same quantities as success. We think the moment we shield the poor from, because we don't want them fail, we are equally actually insulating them from the benefits that would come, and we find that very much problematic. We think, panel, it is very much good for us in this particular debate for us to expose these poor people to these opportunities, even if that includes exposing them to the harms that comes with it. And we'll show you how we can manage to mitigate these harms. Okay, panel. Panel, we told you that the fact that someone is financially poor doesn't necessarily translate to their lack of knowledge. So we think at a point at which someone does have the knowledge, we think they have the capacity to mitigate the harms that comes because of ignorance. Remember, I told you that we actually have people without financial capacity, but these people have enough financial intelligence, and that is something which you value in today's debate. So what does the world that we get from the entire government bench looks like? We told you, panel, that this is a world that actually seeks to protect the poor from the harms that comes with this sort of speculative investments by merely denying them the opportunity entirely. And we told you how that actually further broadens inequalities in this world. We think these sort of investments come with a huge bargaining profits, right? In as much as they come with bigger losses. And we think that still exists whether we are allowing the opportunities to the rich or we are allowing the opportunities to the poor. And the moment we avail these opportunities to the poor, we're giving every individual of them the opportunity for them to bargain when and when they are capable of doing so. And we value that provision of choice in today's debate. We are against a world where there is sort of exclusivity that we get from government bench is actually denying the poor the opportunity to do whatever they would ever want to do with their money in their own lives. And with this, we have never been so proud to oppose.
I thank the opposition whip for that speech, and I thank you all for that amazing debate. And I would like you all to go back to the briefing room. And meanwhile, I'll ask my panelists to join the educators room, please. Thank you all the best.
Thank you.